Thank you. Good morning, everyone. So, welcome to the income tax classes. Good morning, Anchal, Harshal, Isha, Krishna, Amar, Vijay, Lavanya, Krishmita. Good morning, everyone. So, we had completed chapter number 5, set off, right, in the last session, and we had just started with deductions. Any queries we have? Any queries you have from the last session? Anyone? I hope the setup was clear. Now, okay, one query I had kept pending in clubbing. I think someone asked it. Think okay, maybe I'll take it towards the end. Okay, there was one small query which was pending in clubbing when I think Arun Sagar asked it. I think he is not there in the session, but okay, I'll clarify it. Father gave a gift. Father received a gift of 40,000. Son received a gift of 30,000. So son's income was getting clubbed. So will that be included? Will that be? We will see the combined limit of 50K or separate. We will check it separately. Both the gifts will be non-taxable. That is the answer. Okay. So we started our discussion with the deductions yesterday. Deductions from gross total income. Right? Deductions from gross total income. Now we started off with the basics yesterday. Let's have a look what we discussed yesterday. We discussed that, okay, there are various types of deductions. Now we are not computing the taking the deductions in between the head now. We are talking about gross deduction under chapter 6 and 10AA. So there are two types of deductions. It is on certain payments, certain incomes, other incomes, other deductions. Then there was some for some export 10AA. Almost all these deductions, except 3 deductions, are not available in new regime. Only 3 deductions are available in new regime, which we will see. 2 we will see today, ATCCD2 and ATCCH2, and ATJJAA we'll see in the upcoming classes. And there was a difference between the exemption and the deduction, right? Then I discussed something about the ITL, infrastructure business. If you are in, you get your profits of that business you get a deduction for the profits, right? So that was what we discussed, just a basic. So we had covered this thing, this chart. I think we had covered till here, right? Till here it was covered. Everyone, are you with me? Are you with me? Can we move ahead? Okay. Now we are to start with section number 80A. Section number 80A. Now, tell me, give me 1 second. Yeah. Section number 80A says, in computing the total income of the assessee, there shall be allowed the deduction from ATC to ATU. If the assessee has exercised the option of shifting out, if you are following the old regime, then only you will be allowed these deductions. Section 80A2 says, the aggregate of deductions. Okay, tell me, your income is 2 lakhs. Can your deductions be your GTI is, let's suppose it is GTI. GTI is gross total income is 2 lakhs. Can your deduction be 2,50,000? Can you create a loss out of it? Is that allowed? Is that allowed? What do you think logically? So this is not allowed. This is not allowed, right? So you cannot create a loss out of it. This is not allowed, right? So according to section 82, the aggregate amount of deductions under this chapter shall not in any case exceed the gross total income of the assessee. Therefore, the total income after deduction will be either positive or nil. It cannot be negative due to deductions. An assessee cannot have a loss as a result of deduction under chapter 6A and claim to carry forward the same for the purpose of set off against his income in the subsequent year. You cannot carry forward, and you cannot carry forward. First of all, you cannot claim this loss. You cannot carry it forward as well. ATA 3. ATA 3 says, let's suppose this was ATA 2. See, in deduction, now if you will see, in the last two chapters, I have written most of the things on the Excel, right? But this is a chapter where I can write small things only. I cannot write the whole concept on the Excel because that is too big. Wherever the Excel notings are required, I will do that, right? But most of the things we will discuss in the book only. Some of the examples for that I will use the Excel. Otherwise, you will do it in the book only, right? ATA 3 says, let's suppose there is an AOP, Association of Persons, that earns 10 lakhs. AOP donates 1 lakh to charitable institution. There is a deduction for charitable institution, which we will come to know later on. JTG. It donates 1 lakhs to the charitable institutions. Now, the balance is distributed between members. Now, AOP has claimed a deduction under ATG for 1 lakh. Can members claim this deduction again? Can members also claim this deduction? Everyone. Then members are not allowed this deduction. Members are not allowed this deduction, right? So it says ATA 3 provides in case of AOP BOI exercising the option of shifting out, always it is allowed in old regime only, of BSc 1 if any deduction is admissible under ATG, GGA, GGC. We will see all of this. No deduction under the same section shall be allowed in computing the total income of AOP or BOI in relation to share of such member. Now, if it is allowed to AOP, it will not be allowed to the member, right? Fourth, the profits and gains allowed as deduction under section 10AA or any other provision of section 6A under heading C, deductions in respect of certain incomes in any assessment year shall not be allowed as deduction under any provision of the assessment year. Now what it says, let's suppose you have claimed deduction for profits. Let's suppose you were in an infrastructure business, you are in an infra business, you have claimed a deduction for profit. Can you additionally claim ATC? Let's suppose ATC, another section for the same profit. Can you claim another deduction? Can you additionally claim another deduction for the same profit? The answer is no, you cannot double claim anything. You cannot double claim anything. Right? Now read it again. The profits and gains allowed as deduction under section 10AA or under any provision of chapter 6 under the heading C, deduction in respect of certain income in assessment year shall not be allowed as deduction under any other provision of act for such assessment year section ATA 4. Next, now they are saying some headings. What are these headings? If you will see chapter number 6, there are some headings. Let me give you the headings. I'm just pasting some headings here. These are the headings contained in chapter number 6A. Chapter number 6A contains these headings. See, chapters have headings, headings have further sections, okay? Chapter number 6 of the Income Tax Act contains heading chapter number part A, general, part B, deduction in respect of certain payments, part C, deduction in respect of certain income, which we have discussed, part CA in respect of other incomes, and deduction, part D, other deductions. It is the same as in the chart we had seen yesterday. The deduction referred to in 4 above shall not exceed the profits. Let's suppose if you are taking any deduction for the infra business, can the deduction exceed the profits? Can the deduction exceed the profits? Yes or no? The answer is no. So they say the deduction shall not exceed the profits and gains of such undertaking. Next, no deduction shall be allowed if the deduction has not been claimed in return of income. It is mandatory to file if you are claiming deduction under chapter 6, if you are claiming a deduction under heading C in respect of income, it is mandatory to claim in return. It is mandatory to claim in return of income. If you do not claim in return of income, you will not get the deduction. You will not get the deduction. Clear? It is mandatory to claim it in the return of income. Next, the transfer price. For this, I need to give an example. What people do, let's suppose I have two businesses. One is infrastructure business. Another one I have normal business. Let's suppose this normal business supplies some goods to the infrastructure business. Normal business is selling. Now, it is same person selling to the another business. Still, you need to use the transfer price, means arm length price. It means independent price. This normal business is selling some goods to the infrastructure business. Okay. Now, for this, it is purchase. They are selling, it is purchasing. It is the business of the same person. Okay. Same person. Now, if this person is selling, let's suppose normal sale price is 100 per unit. But to this unit, sale price charged is 10 per unit. Why so? Why people try to do so? If you will, to this unit, the sale price charged is 10 per unit. Now, what will be the sale value here? Sale value will be just 10 here, 10 here. Here will be profits will be less or more. If you are undercharging the sales, profit will be less or more. There will be less profits. Infrastructure business, your purchase cost is less. Your purchase cost is 10. Ideally, it should be 100. It means your profits will be more because your cost is less. Profits will be more. And why are you doing this? Because here I need to pay more taxes. Here I pay normal taxes. And here I get deduction for profits. Here I get deduction for profits. So I inflate the profits for profits. So I inflate the profits. Getting it? Have you got the idea? Because I'm getting in the infrastructure business, I'm getting a deduction for the profits. I'm inflating the profits to claim the deduction, to claim higher deduction, right? This is not allowed. They say even if one unit is transferring to another unit, it should be the transfer price. The transfer price should be the market price. Transfer price, internal transfer price should be market price. It cannot be less or more. You cannot plan like this. Clear? The transfer price of goods and services between such undertaking or unit or enterprise or eligible business or any other business of the assessee shall be determined at the market price, market value of such goods as on the date of transfer. Now, what is market value? You can study this, whatever is normally sold in the market for goods and services. Next, where a deduction under chapter 6, chapter under the heading C, deduction in respect of certain incomes is allowed and allowed to an assessee exercising the option of shifting out. It means allowed in the old regime. In respect of profit of specified business, for any assessment year, no deduction under section 35AD. Now tell me, let's suppose if you have claimed deduction under chapter 6A heading C for a business, can you claim deduction under 35AD for the same business? Let's suppose business qualifies in 35AD as well. Can you claim the double deduction? Can you claim double deduction? The answer is no. It says the same thing. So it says, if any deduction has been claimed in chapter number 6, heading C, no deduction under 35AD is permissible in relation to such specified business for the same or any other assessment year. In short, once the assessee has claimed the benefit of deduction under 35AD in respect of specified business, he cannot see. Once he claimed 35AD, he cannot claim Schedule C. He cannot claim heading C. Further, if the assessee pays the tax under the default tax regime, if it is paying in the new regime, is 35AD allowed? In the new regime, neither heading C allowed nor 35AD allowed. In the new regime, nothing is allowed. If the assessee pays tax under the default tax regime under 115 BAC, neither deduction under section 35AD nor deduction under chapter 6A heading C is allowed in respect of certain income would be available to him. Clear? Everyone, are you with me till here? Next, ATAB says deduction under chapter 6A heading C, deduction in respect of certain income shall be allowed only to the extent of such income is computed in accordance with provisions of Income Tax Act. You cannot claim according to the accounting income. You will claim as per the tax income. You will claim the deduction as per the tax income, not the accounting income. Accounting income is not. You will claim the deduction according to the tax income, not the accounting income. ATAC. Now we have discussed. Now very important condition. What is ATAC says? If you are claiming deduction under chapter 6A heading C, I said return filing is mandatory. I earlier said return filing is mandatory. Now I am saying return filing is mandatory by the due date. Return filing is mandatory by the due date specified in 139(1). What is 139(1)? We will see this. This chapter will come later on. It is the due date of the tax return. It is the due date of the tax return. Clear? This is ATAC. Now in ATAC, you have section ATIA, ATIAB, IAC, IB. These all we are not going to study. We had discussed yesterday. Only these three sections are in curriculum: ATJJAA, ATQQB, ATRRB. Only these three sections are in curriculum. The effect of the provision is that in case of failure to file return of income on or before the stipulated due date, the undertaking would lose the benefit. If you do not file before the due date, they will lose the benefit. Now, section ATIA to E, ATJJA, LA, M, and P are discussed at the final level. They are not discussed at the intermediate level. Clear? Anyone, any doubts still here? Anyone, any doubts still here? Okay. Yeah, except ATS's heading C, we will study all the sections, right? Now, this question you can do it yourself. Very simple question it is. This question you can do. Is my pace fast? Am I speaking fast? Everyone else, am I speaking fast? Do I need to slow down? To some it is fine. Everyone, is it fast or fine? Some are saying fine, some are saying fast. Isha, Krishna, Amar, Vijay. Okay, I will slow down. Some are saying fast, some are saying it's a mixed response, but I'll slow down. Okay, no problem. ATB5. ATB5. It says what is gross total income? Gross total income is total income computed in accordance with the provisions of the Act without any deduction under chapter 6A. But you need to give the deduction under appropriate computation under respective head. Let's suppose standard deduction of salary. Will you give standard deduction of salary to calculate the gross total income? Anchal, will you give standard deduction of salary to calculate the gross total income? You will give the respective heads deduction, right? You will give the respective heads deduction, but these deduction under 80C you will not give. This 6A. Income of other persons if included, clubbing of income provisions you will consider, intra-head set off you will consider, unabsorbed brought forward losses, everything you will consider, but you will not consider chapter 6A and 10AA. Chapter 6A and 10AA, those are considered after gross total income. Right? Now deductions from gross total income. Deductions under chapter 6A. There are deductions in respect of payments, in respect of certain incomes, in respect of other incomes, other deductions, and section 10AA. Now we are starting with one very important section, 80C. You will hear this section multiple times in your offices. When after your intermediate, when you will join the offices, you will hear this section a lot. If you will be preparing the income tax returns, you will hear this section a lot. See, now the new scheme is there. The relevance has reduced of this chapter. This chapter relevance has somewhat reduced because now most of the deductions are not available in new scheme and many people are opting the new scheme. Many people are opting the new scheme. Right? Section 80C. It is deduction in respect of certain payments. If you will make some payments, then you will get a deduction. If you will make some payments, you will get a reduction. I think 20 to 23 payments are there. Let me tell you the exact number. There are in total 23 payments. 23, approximately 23 plus payments for which you get a deduction. Right? If you will pay, you will get a deduction. If you will not pay, you will not get a deduction. Very simple. Now the person, whosoever is paying will get the deduction. Now it is for individual or HUF. This section is for individual and HUF. It is not for the companies. It is not for the companies, right? And it says, see here, it says applicable if the individual or HUF exercises the option of shifting out. It means they're in the old regime. It is available only in old regime, not available in new regime. That you can list down for every deduction, because only 3 deductions are allowed in the new regime. No the other deduction is allowed in the new regime. So this is allowed in only the old regime, where they exercise the option of shifting out of default tax regime. Now it says individual HUF. Is resident and non-resident both are covered, or only the residents can claim it? What do you think? By reading this line, only residents can claim or non-residents can also claim? Both can claim. Even residents and non-residents both can claim. Now, if you make the payment, for whom you will make the payment? Let's suppose you are purchasing the life insurance policy. Think logically. Will child purchase its own policy or the parents will purchase the own policy? Will child will purchase its own policy or the parents will purchase on behalf of child? Parents will purchase. So for whom the deduction is allowed? Can child pay for himself? The answer is no. So this deduction is allowed for you, your spouse. Spouse means for husband it's the wife, for wife it's the husband, right? For you, your spouse, or your children. You can pay for yourself, for your spouse, for your children, you will get the deduction. Children should be dependent or independent. It can be any. Dependent oblique independent. This point is very important. The examiner tries to trick you on this. The limit for ATC limit is 150K maximum. Maximum limit is 1,50,000. Now, till now, what we have studied, there are some list of payments. If you make those payments for yourself, for your spouse, for your children, whether dependent or independent, if you are following the old regime, whether you are resident, non-resident, if you are individual HUF, you are paying for it, you will get a deduction. The maximum limit is 1,50,000 rupees. Is it clear till here? This is the analysis of section 80C. Now we will discuss now what are these 23 payments. We will discuss one by one what are these 23 payments. First payment. See, out of these 23 payments, there are 4 or 5 payments on which we need to focus more. Although I will explain all of these, but most important tested in exams and most important from practical perspective as well, there are 4 or 5 payments which are tested more. So we will focus on that. Deduction in respect of investment oblique contributions. ATC provide a deduction from gross total income of savings in specified modes of investment. The deduction under ATC is available only to individual HUF exercising the option of shifting out of the old regime, default regime, it means for following the old regime, It is not allowed under the default tax regime. The maximum deduction is 1,50,000. The maximum deduction is 1,50,000. Is it clear? First payment, unit linked insurance plan. If you are purchasing contributions in the name of individual, spouse, child, or individual for participation in the unit linked insurance plan, if you are purchasing the ULIP policies, in case of HUF, the contribution can be in the name of any member. If you are purchasing any ULIP policy, whatever amount you pay for the ULIP policy, that is allowed as a deduction in the section 80C. You want the deduction to be higher or lower? 80C is a deduction. You want the deduction to be higher or lower? You want the deduction to be higher so that your income is lower and you pay less taxes. Right? So first one is when you contribute to the ULIP of 1971. Second, if you contribute to ULIP of LIC mutual fund. Contribution in the name of individual, self, spouse, children to any unit linked insurance plan of the LIC mutual fund. If you're purchasing any unit of the LIC mutual fund, then this deduction is allowed. Very, very important. Please mark it important. Premium in respect of life insurance policy. Very, very important. Premium paid in respect of life insurance policy. Premium paid on life insurance policy of the individual, spouse, and any children, minor or major. In case of HUF, any member thereof, this will include a life policy or endowment policy. Now, please write here. ATC, life insurance policy. If policy purchased, policy issued before Anil, let me complete it. Then I will give you some tactics to remember. Okay. Firstly, let us don't limit yourself in the understanding. Firstly, understand the full, then we will discuss it. Okay. If policy issued before 31st, see why I'm writing a few things. There is a reason behind it. Why I'm writing a few things on the Excel? Because if those things you write, it get registered in your mind. That is also one way of getting it remembered, right? If I will just keep on telling you and you just keep on listening, the things will not get registered. That's why I write some of the important things so that it get registered in your mind. If policy is issued before 31st March 2012, 20% of the sum assured, 20% of the policy amount. 20% sum assured means policy amount. 20% of sum assured is allowed as deduction. If policy is issued after 31st, or I can say after 31st December, 31st March 2012, or then you are allowed 10%. 10% of sum assured as premium. If policy is issued, if the person is disabled and policy is issued after first on or after 1st April 2013. Let's write it here on or after. Let's write it like this, on or after 1st April. Please make some changes. 1st April 2012. If person is disabled and policy is issued on or after 1st April 2013, then the premium allowed is 15% of sum assured. 15% of sum assured. Please note it down. We will do a question, you will understand it. See here, if policy is issued before 31st December, 20%. After, between 1st of April 12 to 13, 10%. After 1st of April 13, it was 10% only, but only for the persons who are disabled. For them, it is 15%. And disability is defined in section 80U and 80DDB, which also we will cover in the upcoming classes. Let's solve this equation, you will get clarity. Compute the eligible deduction for ETC in respect of life insurance premium paid by Mr. Ganesh during the previous year 25-26, the details of which are as under if Mr. Ganesh had exercised the option of shifting out of default tax regime. It is following the old regime, and this deduction is allowed only in the old regime. Date of policy issued. If policy is issued on 30th March 2012, it is before 31st December 2012. Now I have taken a policy for myself. The sum assured is 9 lakh. Sum assured is 9 lakh. How much was allowed? 20% was allowed. 20% was allowed. How much will be the 20%? How much will be the 20%? 1,80,000. 1,80,000. Now, can I be allowed 48,000? The answer is yes. So the 48,000, because it is below 1,80,000. So 48K will be allowed as premium. Second, the policy is purchased on 1st of May 2019. It means after 31st March 2012, 10% purchase for the spouse. Spouse is allowed. 1,50,000. What is the 10%? 10% is 15,000. The premium paid is 20,000. How much will be allowed as deduction? How much will be allowed as deduction? Maximum is 15,000. Clear? Now the policy is purchased on 1st of June 2022. Handicapped person. If the policy is purchased after 1st of April 2013, then see here, there is a difference in the dates. For handicapped, the provision came in 2013 from 12 to 13. From April 12 to March 2013, that 10% will apply only also for the handicapped. The provision for the handicapped came in 2013. Now 15% is allowed. 4 lakh into 15%. How much? 15%. 15% is 60,000. The premium paid is 80,000. 60,000 only will be allowed. Only 60,000 will be allowed. So how much is the total? How much is the total? 1,23,000. 123K. It is below 150K. The overall limit is 150K. So this much will be allowed as deduction. For the life insurance policy, this much will be allowed as deduction under section 80C. I hope it's clear, everyone. Any doubts anyone has? Yeah, it cannot cross 1,50,000. Yes. Is the speed fine now? I hope we are not in a hurry. We need to at least keep this pace, right? Clear? Moving on. Next is, see, if they follow the default tax regime, then nothing is allowed. In new tax regime, nothing is allowed. This premium amount is allowed as expense. Yes. Sum assured is not expense. The insurance premium which I paid is my expense, right? Insurance premium which I paid. Now there is a limit on the premium that we can pay. That limit we have seen. Okay. Premium paid in respect of contract for deferred annuity. See, some points will come. I can give you a lot of explanations there, but probably those points are very less important. Anil, let's not go into it. Why the percentage changed from 20 to 10%? The government says at least you should purchase a policy for 10 years, right? That's why they say if you will take the 10%, if you will divide it 10% over the number of years, it will come 10 years, right? So if the policy is purchased for at least 10 years, that 10% is the premium, then that's the some logic, okay? But don't go into it. Next, premium paid in respect of contract for deferred annuity. What is annuity? Everyone understands what is annuity. This point is less relevant, but I want to explain you the annuity concept. That's why I'm just taking it. Annuity concept everyone understands. You pay today, you pay premium today. Let's suppose you pay premium today. Let's suppose for 12 years. You pay premium today for 12 years. When you will turn endowment policy, how to explain it? Let me just quickly. Endowment policy. I'm just not getting the words to explain. It is a hybrid life insurance policy that combines the savings with a death benefit. It is pays a lump sum payout either to beneficiaries if the policyholder dies or to the policyholders. See, what is a life insurance policy? Life insurance policy says if the person dies, then the money will get to the beneficiaries, right? Now, endowment policy is if let's suppose there is a 20-year policy. If you are alive, you will get the money. If you are not alive, your beneficiaries will get the money on the death, right? That is a mixed hybrid instrument that is called endowment policy, Sushmita. Now, I wasn't deferred annuity. I was explaining you deferred annuity. You pay premium for today for 12 years, right? Now, let's suppose when you reach age of 60, you will get monthly pension out of the plan. You will get monthly pension. That is called deferred annuity. You are paying today, you will get monthly pension. Okay. When you reach age 60, you will get monthly pension. That is called deferred annuity. Now, if you pay the premium for a contract of deferred annuity on the life of individual, spouse, or child, provided such contract does not contain any provision for the exercise of insured to receive cash payments. There is no provision to receive cash payments in between. If you can surrender the policy in between, you can take cash payment. This is not allowed. If there is no option, does not contain an provision for exercise of an option to receive cash payments in between, then the premium paid is allowed as an deduction under section 80C. Contract for deferred annuity need not necessarily be with the insurance company. It can be with any person. Clear? Any sum deducted from the salary payable to a government employee for securing a deferred annuity. Now, if I am a government employee, government is deducting some amount from my salary and contributing so that I get a plan of deferred annuity. Amount deducted on behalf of government from the salary of government employee in accordance with conditions of service for securing a deferred annuity. So there is some employee contribution, some money is deducted from my salary and is paid for the deferred annuity contract, right? Now for that premium, whichever is paid, I will get a deduction. I will get a deduction for the premium paid. It is for the government employees. Now excess of 1/5. Now up to 20% of the salary, 1/5 of salary, up to 20% of salary you can contribute. Above is not considered. Up to 20% of salary you can contribute. Next, there is a concept of SPF, RPF, PPF. Sixth number. SPF. Anchal, it is. Anchal, let's suppose your salary is 10 lakhs. The government says out of this 10 lakh, we will withdraw 1 lakh and we will contribute for you for a deferred annuity policy. They are withdrawing 1 lakh and they are contributing on your behalf to the deferred annuity policy. Then that 1 lakh is allowed as an expense. 1 lakh is allowed as an investment in ATC. That 1 lakh is allowed. Very simple. They can say it can be not more than 1/5. If it's contributing 1 lakh, it is equal to 20%. Yes, it is below 20% is allowed. The government says we will withdraw 3 lakhs. We will withdraw 3 lakhs. Then 3 lakhs, is 3 lakh allowed? No, answer maximum is 2 lakhs. Up to 20% is allowed. What is deferred annuity policy? Have I not explained it? Anchal, I have explained you here what is deferred annuity policy. In fourth point, you are doing the contribution for yourself. In fifth point, it is for the government employee. Government is withdrawing some money from your salary and contributing on your behalf. That is the difference in fourth and fifth point. Clear? Whatever deferred annuity we can claim as deduction, it is exclusive applicable for government employee. Yeah, for government employees, there is a specific point, fifth point, right? Fourth is a general point. You can contribute for yourself. Any other queries or can I move? Clear? Sixth point says SPF, EPF, sorry, SPF, RPF, and PPF. SPF is Statutory Provident Fund. RPF is Recognized Provident Fund. PPF is Public Provident Fund. Statutory Provident Fund is for the government employees. It is for private sector employees. PPF is anyone can contribute. Have you, in your corporate law subject, have you heard of PF Act? Have you studied PF Act, by the way? Have you studied the Provident Fund Act? Do you know what is Provident Fund? In salary, you would have seen Provident Fund. There is an employee contribution as well as employer contribution you have seen. How much contribution is there normally? How much employee contribution is there normally? How much percentage? 12%. Now that employee contribution is allowed as a deduction here. That employee contribution here, the employee contribution is allowed as a deduction here. If you are contributing, whatever employee contribution you do, that is allowed as a deduction under section 80C. For the government employees, it is Statutory Provident Fund. Public Provident Fund is somewhat different. PPF is an investment vehicle. If you deposit money in PPF account, you can go to bank, open a PPF account. If you deposit money in PPF account, then also you can get a deduction. Public Provident Fund is different from Recognized Provident Fund. Public Provident Fund, you can deposit money and you can directly deposit money, and you deposit money in the PPF account, then you get a deduction. Is that clear? So contributions to Provident Fund under the Provident Fund Act is recognized as deduction under Section 80C. Contribution to Provident Fund by the central government and notified in this behalf, public Provident Fund established under the Provident Fund scheme also qualifies for deduction under Section 80C. Such deduction can be named in the name of individual, spouse, child, any member of the family. In case of HF, the maximum limit is 1,50,000. Anyways, even if the maximum limit for PPF given is 1,50,000, but anyways, the overall limit is also 1,50,000. Clear? Are you with me till here? Vishaka, statutory provident fund for government employees, same. You have studied 12%, same for government employees. Whatever employee contribution is there, that is allowed as deduction for the government employees. For government employees, instead of RPF, it is SPF. See this example. An individual assessee resident in India has made the following deposit or payment during the previous year, 25-26. Contribution to Public Provident Fund, 1,50,000. Insurance premium paid on life of spouse, policy taken on 1st 1/4/2019. Can you tell me how much premium will be allowed? How much premium will be allowed? Harshal, which 1/5 you are talking about? There is no 1/5 condition here. Please do not confuse yourself. 2,20,000 into 10%. Harshal, when we have already moved to point number 6, please focus yourself to point number 6. If you will keep juggling between the points, you will not understand and it will break the flow. It was a different point. It was a deferred annuity. It is a RPF, Public Provident Fund contribution, right? Okay, 10% is allowed. 10% of the policy is allowed. So how much is allowed? 22K is allowed, right? 22K is allowed plus 1,50,000 here. 1,50,000 here allowed. Can I claim 1,72,000 total? Can I claim 1,72,000 total? The answer is no. Maximum is limited to 150K again. Maximum is limited to 150K again. So it will be limited to 150K, right? 150, 22, 172, maximum is limited to 150. Clear? I hope it's clear, everyone. Next. Do you know what is superannuation fund? I think you would have discussed in salary. Superannuation fund. It is created for the retirement of employees, right? Employer also contribute, employee also contributes. Now, if there is an employee is contributing to a superannuation fund, approved superannuation fund that qualifies for deduction under Section 80C. If employee is contributing to a superannuation fund that qualifies for deduction under Section 80C. Clear? Next. If any sum is deposited in a Sukanya Samriddhi account, it is a scheme that government launched, I think, in 2013 or 14. 14, right? I think. Near about 2013-14, government launched a scheme, Sukanya Samriddhi account. They said, okay, we will promote the saving for the girl child. If you will deposit money in the Sukanya Samriddhi account, you will get a deduction under Section 80C. You will get a deduction under Section 80C. So subscription to any such security of the central government or any deposit scheme as the central government may notify in the official gazette. Accordingly, Sukanya Samriddhi scheme has been notified in the official gazette to provide that any sum paid or deposited during the previous year in the said scheme by the individual in the name of girl child or the girl child from whom individual is for whom the individual is the legal guardian would be eligible for section 80C. If you are contributing money to the Sukanya Samriddhi account, you will be eligible for 80C deduction. Exemption on payment from Sukanya Samriddhi account. Now, if you will withdraw money, now there are some rules given. You can withdraw money on account of marriage when the child attains the majority and all. Now, if you will withdraw money as per the rules, any payment in the account made under the Government Savings Bank Act, that will not be included in the income. Even the interest earned on this account would be exempt. Even the interest earned on this account will be exempt. Clear? So this is a Sukanya Samriddhi account. Next, if you purchase the National Savings Certificate, NSCs, earlier these were very famous. Nowadays their trend has reduced, but earlier these were very famous. You purchase NSC certificate, National Savings Certificates, right? NSC 8 certificates if you purchase for investment, these are government investments, then you get a deduction under section 80C. Approved annuity plan of LIC, if you subscribe to the approved annuity plan like New Jeevan Dhara plan, New Jeevan Akshay plan, New Jeevan Dhara 1, New Jeevan Akshay 1, 2, 3, if you contribute to any of these plans, you will get a deduction under section 80C. Specified towards notified units of mutual funds for India. If the government notifies any mutual fund schemes or unit trust of India, if you subscribe to any units in this equity linked mutual fund units you can purchase, right? Then you can get a deduction under section 80C. Notified pension fund set up by mutual fund or unit trust of India. If any central government can notify, like they have notified the UTI retirement benefit pension fund. If you contribute any money to this account, you will get a deduction under section 80C. These are very, very simple. These are just the names. Okay. Contribution to National Housing Bank tax saving term deposit scheme. If you are subscription to the any deposit scheme or contribution to any pension fund set up under the National Housing Bank, if you are subscribing to any deposit scheme of the National Housing Bank for the to any pension fund, again whatever amount you contribute that will be allowed as deduction under section 80C. Subscription to notified deposit scheme, if any government notifies any scheme of a public sector company which is engaged in long-term construction or purchase of houses in India for residential purpose, or the government notify any deposit scheme of any authority constituted in India for the purpose of dealing with and satisfying the need for housing accommodation for the purpose of planning, developing, improvement of societies, improvement of cities, towns, villages, or both, then whatever amount you contribute to these schemes, that will be allowed as deduction under section 80C. Like the HUDCO scheme, public deposit scheme of HUDCO is notified. If you contribute any money to this scheme, you will be allowed a deduction under this section 80C. Everyone, are you with me till here? These are just the names that you need to see, not much technicals in it. Next one is important. This one is important. Okay, just go up. Let me mark the important ones side by side. I marked here for third one is important. Sixth one is important. It is the employee portion here. It is contribution is the employee portion. You can write here. EE means employee. It is the employee portion. It is the employee portion of the contribution. Then you can say Sukanya Samriddhi also you can see sometimes the question comes. Then 15 number is important. No one else. You are not required to know about National Housing Bank schemes. All these schemes are not required to know in detail, nor even the structure of these schemes. That is outside the purview of this course. Whatever we are discussing in the class is sufficient. Payment of tuition fee. If you have children are going to the school. Now this tuition fee is not private coaching fee. Let me write here. This is number 15. Yes. Tuition fee. It is the fee of the school or educational institution. It is the fee, tuition fee paid to school, college, or educational institution. If you pay fee to a coaching center, is that allowed? It is not allowed as deduction. It is not allowed as deduction. Again, whatever fee you pay to the school, all fee paid to school is not allowed. Only the tuition fee portion is allowed. See, school charges you many things like development fee, but not school charges you many types of fees. All fee paid to school is not allowed. Is not allowed. Only tuition fee portion is allowed. Only tuition fee portion is allowed. Right? And it is not allowed for maximum 2 children. Allowed for maximum 2 children. Payment of tuition fee by an individual assessee at the time of admission or thereafter to any university, college, school, or other educational institutions within India for the purpose of full-time education of any 2 children of the individual. This benefit is only for the payment of tuition fee for full-time education. Shall not include any payment towards development fee, donation, or payment of similar nature, and payment made for education to an institution situated outside India. The institute should be within India. It should be within India. No, the institute should be within India. Institute should be located within India. Institute should be located within India. Clear? So this is about tuition fee. Next. This one is also important. Repayment of housing loan. If the interest on the housing loan, interest is covered in which section? Interest is covered in which section? Section 24B. 24B. Here only the principal portion is covered. Only principal portion is covered here. Only principal portion is covered here. Okay. Only principal portion is covered here. The interest portion is covered in 24B, and there are one more deduction that we will study, but here only principal portion is covered. If you repay repayment of housing loan, including stamp duty, registration fee, and other expenses, any payment made towards the cost of purchase or construction of a new residential house property, the income from such property should be chargeable to tax under the head income from house property. Now, if you are repaying any loan, for the purchase or construction of a new residential house property, plus income from this property is chargeable under the head house property, right? And or if income is not currently there, would have been chargeable under the under the head house property had it not been used in the assessee's residence. Then whatever loan repayment is there, the principal portion is allowed as a deduction under section 80C. What are the approved types of payments? What are the approved types of payment? Any installment or part payment of the amount due under the self-financing or other schemes of development authority, housing board, other authority engaged in construction. Any installment or part payment to any amount to a company. You have taken a loan from any company or a cooperative society. Repayment of amount borrowed from. You borrowed from a central government, bank, life insurance corporation, national housing bank, any public company provided in long-term finance for the residential purposes. Any company in which public are substantially interested in the business of financing. Assessee's employer, where the employer is the authority of board resolution under the central or state act. The assessee's employer, where it is a public company, right, affiliated to local authority or cooperative society. Now, whatever principal amount you pay, that will be allowed as deduction, and any stamp duty, registration fee, or any other expenses for the purpose of transfer of house to the assessee, all that is allowed as deduction. But make sure all these deductions total cannot be more than 1,50,000. Clear? Inadmissible payments. If you have paid some admission fee or cost of share or in the initial deposit you have made for the cost of addition. Can you see? It is allowed for the purchase or construction of new house. For the renovation and improvement is not allowed. Renovation is not allowed. Repair is not allowed. Addition or alteration is not allowed. After the issue of completion certificate, if you have been issued the completion certificate, then this deduction is not allowed. Very important point. Any expenditure in which a deduction is allowed under section 24. If deduction under section 24 is allowed, then surely you cannot claim a double deduction here. You cannot claim a deduction here. Clear? So the important point is, if you have taken a loan, you are repaying the principal, that principal payment is allowed as a deduction. But loan should be for the construction of a new house, not for the renovation or improvement. Next, this is again not important, not so much important, even practically also not important. Subscription to certain shares or debentures. They say if you subscribe to certain equity shares or debentures as approved by the board on application made by the public company, or a subscription to eligible issue of capital by the public financial institution. The reality is that no company is notified here recently. There is no company notified here in the recent years. So ideally, this is not applicable. A lock-in period of 3 years is there. It says if you purchase the shares of a company who is notified, the company should apply to the board for this notification. Now, if any company applies, there's a lock-in period of 3 years in respect of equity shares or debentures. In case of any sale or transfer of shares or debentures within 3 years, within the date of acquisition. Now, there is a lock-in of 3 years. If within 3 years you sell, then whatever deduction has been given to you will be deemed to be the income. They say, if you have purchased the equity shares, you should hold it for 3 years. If you do not hold it for 3 years, then let's suppose you sell it in between, then whatever deduction was allowed to you, it will be deemed as income in between, and deduction would be reversed in a sense. It will be deemed to be the income of the assessee of such previous year and shall be liable to tax in the assessment year relevant to such previous year. A person shall be treated as having acquired any shares or debentures on the date on which the name is entered into in those shares or debentures in the register of members. Whenever your name is entered in the register of members, then on that date, it means you have acquired the shares of that company. Clear? Practically also, theoretically also very less relevant. Subscription to certain units of mutual fund. If you acquire the units of mutual fund of an eligible issue of company, then you can get a ATC deduction. Investment in 5-year deposit, this is important. If you create a 5-year FD 5-year FD. In fact, I personally created it some years ago, right? If you create an FD with the bank or a post office, right? So then the FD has a lock-in of 5 years. Period not less than 5 years with a scheduled bank is in accordance with the scheme. Now you can get a ATC of maximum 1,50,000. You do it with SBI Bank, subsidiary of SBI, or any new bank or any other bank which is notified in the second schedule of RBI. Subscription to notified bonds of issued by NABARD. If NABARD has issued, if NABARD bonds have been issued, they're notified, then you get a deduction. Investment in 5-year post office time deposit. If you make a deposit in the post office, then you will get a deduction. Deposit in senior citizen savings scheme rules. Contribution to additional account under NPS. Now, if you contribute to the NPS, see, for this, there are two types of deductions. Let me take point number 23 here. NPS is National Pension Scheme. You contribute today, in future you will get pension, right? There are two types of accounts. Tier 1 is individual pension account. For this, we will study a separate section, ATCCT. There is a tier 2 account, that is section ATC, but it is only for the central government employees. It is only for the central government employees. So if the central government employees have contributed some additional amount to the tier 2 national pension scheme, then this is allowed. So contribution by central government employee to additional account under NPS referred to in ATCCD 2 for a fixed period not less than 3 years, which is in accordance with notified scheme, qualifies for deduction under section ATC. It may be noted that only the contribution to the additional account will qualify as NPS. There are two types of scheme, tier 1 and tier 2. Tier 1 and tier 2. ATCCD covers the tier 1 account. Now this deduction is for, thus come to the last line. Thus tier 2 is the additional account under NPS, contribution of which qualifies deduction under ATC in the hands of central government employees only. Clear? So these were 23 points. These were 23 points. If you invest in these, you will get if you do a payment in these, then you will get a deduction of ATC, but maximum is 1,50,000. I hope it's clear, everyone, till here. Are you with me till here, everyone? Any doubts? 19th point. What is 19th point? 5-year deposit scheme. Very easy. Anchal, if you have created an FD, now what I did, I was to claim a deduction. I had gone to my bank. I had asked the bank, okay, I want to create a 5-year FD. That FD cannot be broken before 5 years. There is a 5-year lock-in, right? Now, that FD I've created for 1,50,000. I got a deduction under ATC for 1,50,000. Now, what the point says, if there is a FD for not less than 5 years with a scheduled bank or in accordance with a scheme framed by the central government, the deduction is allowed. ATC maximum is 1,50,000. The SBI, the subsidiary of SBI, corresponding new bank or any other bank, whichever bank, all the scheduled banks are covered here in this scheme. 23rd point, contribution to additional pension scheme. See, very simple. Tier 1, individual. In tier 1 individual pension account, there are two types of pensions. There are two types of pension schemes. What are pension schemes? You contribute today, now tomorrow you will get pension in the future, I mean, right? So tier 1, there are two types of pension. In that, there are two types of pension account. One is tier 1 and tier 2. We will study a section where the tier 1 is covered. We will study this section in detail after the break. Tier 2 is an additional account. It says ATC. It is covered under ATC. If any central government employee is contributing any to the pension scheme under tier 2, then they will get a deduction under ATC. 0.5, how do we find deduction allowed 1.5 in case government employee? Harshal, okay. See, this point is very, very irrelevant, Harshal, to be true. This point is not at all relevant because if you see the practicality, this point is not at all tested. I can give you more examples. I don't have a problem. Let's come back to point number 5. See, okay. Before that, on point number 23, under tier 1 contribution, we can separately claim 1.5 lakh deduction. ATCCD forget, I haven't discussed. In tier 2, you get a limit of 1,50,000, but 1,50,000 is not only for tier 2, it is for entire section ATC. Tier 1, tier 1 is having ATCCD limit that we will discuss separately. ATCCD we haven't discussed. Come to point number 5. I will do a R&D on point number 5 now. Very, very irrelevant point for discussion, but I'll still do it. It's a very, very simple point. What it says, you know what is an annuity contract, Goldi? Anil? Sorry, Harshal. You know what is annuity contract? What is deferred annuity contract? This is a government's employee payslip. The salary is 10 lakhs. From this, they contribute to a policy, deferred annuity policy. They contribute how much? They contribute 1 lakh. How much employee? I'm not taking into consideration TDS and all those things, PF and all those things. Forget. The net pay of the employee will be 9 lakhs. Now this policy is for the deferred annuity. Now the government says for this we will give you ATC deduction for 1 lakh. Is this clear, Harshal, till here? Is this clear till here? Harshal, quickly, yes or no? Now another example. Salary is 10 lakhs. Contribution to the policy is 3 lakhs. I said the maximum allowed is 2 lakhs, 20% of the salary. Or I can say, you can say 1/5 of the salary. 10 lakhs divided by 5 will come 2 lakhs. Now, even if you have contributed 3 lakh, the ATC, okay, maybe let ATC limit is 1,50,000. Let me reduce the salary. Let me do it 5 lakhs. The salary is 5 lakh. They have contributed to the policy 1,25,000. Maximum allowed is how much? 20%. 1 lakh. Maximum allowed is 20%. Right? Even if you can take 125k is below 150k limit, but you will be allowed ATC deduction for only the 20% portion. That will be the 1 lakh. Is it clear, Harshal, now? Is it clear now? Ignore about 20%, right? That's what I said earlier as well. Annuity provision is also applying gratuity provision. Please do not confuse annuities and gratuities. Sridhar, I will not discuss the gratuity provision right now. Okay, let's cover this. Then we will take a break. Termination of insurance. Okay, now let me give you a logic here. Let me give you a logic. You have purchased a house property. You had repaid a loan. You had repaid a loan on house property. You got a deduction. You got a deduction under section ATC. You've taken a deduction under ATC. Do you think the next year you sells the house? The next year you sells the house. Is it fair? The income tax will say, okay, you just got a deduction, then you just sold the house. They say there is a condition of 5 years. there is a condition of 5 years. If within 5 years you sell the house, whatever deduction, if within 5 years you sell house, whatever deduction you have received earlier will be taxed now. Whatever deduction you received earlier is deemed as income now. Is deemed as income now. Clear? Same is applicable for other policies. Let's see the book. Termination of insurance policy or unit linked insurance plan or transfer of house property or withdrawal of deposit. If you terminate any insurance policy referred to in point 3, either if it is a single premium policy, within 2 years if you terminate it, or in other cases, if you haven't paid more than two, if you have not paid more than 2 premiums, or you terminate the unit linked insurance plan, right? You haven't paid the premium for 5 years. You have transferred your house property before the expiry of 5 years, before the end of the in which the possession of such property is obtained, he receives back by whatever way of refund or otherwise any sum in specified in 16 above. Then no deduction will be allowed. No deduction will be allowed in respect of sums paid during such previous year, and the total amount of deduction allowed in respect of previous year or preceding such year is deemed as income. Whatever amount was allowed is deemed as income and shall be liable to tax in the assessment year relevant to such previous years. Clear? I don't think there is any specific uh, I don't think there is any specific exception for the compulsory acquisition, Anil. Correct, Anchal. We have to fulfill the conditions, only then we are eligible for the deduction. It doesn't mean you got the deduction, then you don't fulfill the conditions. Next. Further, where any citizen is, where any amount is amount by the assessee from his senior citizens account. Same way, from the senior citizen savings scheme, if you withdraw before 5 years, same will be charged to income, right? Interest will also be charged to income. This is same. If the amount has been received by the nominee or legal heir on the death of the assessee, in the senior citizen savings scheme, if the amount has been received on the death of the assessee, then it is not chargeable to tax, even if the 5 years haven't closed, right? However, if the interest relating to the interest on deposit now, but the interest will be taxable. The amount received is non-taxable, but the interest will be taxable. This is the summary. You can go through yourself. I've covered all the points. I hope it's clear till here. Whatever we discussed, I hope it is clear. Vishak, are the Excel files not uploaded? See, I'm not sure. I talked to the team as well yesterday. There is a problem in the portal with the uploading of Excel file. It is taking the PDFs, not the Excel. So what I will try is I will convert it to the PDF and try to upload it. Okay. I will try to convert it in PDF and then try to upload it. Okay. Because Excel files it is not taking. I also tried to upload it yesterday. Okay. Let's get on a quick break. Then we will proceed with the next deduction. It's 12:25. We're taking a 10-minute break. We will start at 12:35. Okay. Thank you. Monthly Excel sheet. Okay. Yeah, Anil, I'll upload it Excel. Excel is not getting uploaded. So what I'll do is I'll convert it to the PDF file and upload it today. Okay. We are starting with the next section. ATCCC. Again, this is allowed only if you are opting out of the default regime. Now, very simple. Where an assessee, being an individual, has in the previous year paid or deposited an amount out of his income chargeable to tax to effect contract of annuity plan of LIC. If you purchase any annuity plan of LIC of India or other insurer, then you get deduction under. If you purchase any LIC annuity plan of the LIC, then you get a deduction under ATCCC. He shall be allowed a deduction in computation of the total. Interest or bonus accrued or credited to the assessee's account shall not be reckoned as contribution. That is not contribution. Where any amount paid or deposited by the assessee has been taken into account for the purpose of this section, section ATC shall not be allowed. Again, very easy. If you are taking some amount in ATCCC, you cannot take ATC for that same amount. What is the maximum amount allowable is 1,50,000. Now write a note here. Write a note on the limits. ATC plus ATCCC plus we will study one more ATCCD1. For these all the combined limit is 1,50,000. This is the 1,50,000 is the combined limit. The combined limit is 1,50,000. Clear? There is a combined limit of 1,50,000. So if you have exhausted all the limit in ATC, you cannot get in other two, right? This is a combined limit of 1,80,000. This is as per section ATCCE. Yes. So ATC plus ATCCC plus ATCCD1 combined limit is 1,50,000. Okay. Deemed income, again, if you will surrender the policy where any amount standing to the credit of the assessee in the fund, a deduction has been allowed together with interest or bonus accrued on the assessee's account is received by the assessee or his nominee on account of surrender, or if you surrender the policy, annuity policy in the previous year, and pension received from annuity policy, or if you do not surrender, at the end you receive pension from the policy, those are taxable. Those are deemed as income. Those are deemed as income. Whichever withdrawal you make, those are deemed as income. Clear? ATCCC is very simple. If you take, just the important point is, if you take any annuity plan of the LIC or another insurance, which is insurer which is not required. ATCCD, very, very important. ATCCD, very, very important section. Now, in this is for the pension scheme. This is for the NPS. We also call it NCAPS, or we also call it as pension scheme of central government. Earlier, this was only for the central government employees. Then state government was also covered. Now it is for the central government employee. For the state government employee. When I type, there can be minor typos. Just excuse me for that. State government employee. It is also for the private individuals. It was extended to the private salaried individuals. private employees, right? It is also for the self-employed individuals now. It is for everyone now. It is for everyone now. Now, if you contribute, now this is also known as Atal pension. Now, the another news, this is Atal pension Yojana. Now, if you contribute to the pension scheme, see in ATC, if you will see in ATC, wherever we have we seen the employer contribution ever? Whether it was Provident Fund, right? It was always in ATC. See, some things I write in very general terms, layman terms, right? To make you understand. Those don't write these things in the exams, right? In ATC, always we talk about employee contributions. In ATCCD, we talk about both employer and employee contributions. We talk about both employer and employee contributions. Now, ATCCD says there are three parts to it. There are three parts to it. One is ATCCD 1. Sorry, ATCCD 1. There is another one, ATCCD 1B. Then there is ATCCD 2. These two are the employee contributions. These two are the employee. I write EE means employee. EE means employee. ER means employer. These two are the employee contribution. This is the employer contribution. Now, another thing, please link. Okay, let me explain first. Wait. If you, now this is already included. This ATCCD1, this is included with the limit here. Can you get it? This is included in the limit of entire limit of 150K. But ATCCD2 has a maximum limit of 50K additional. And ATCCD2 I think ATCCD2 also has a limit. I'm just forgetting. Just a second. ATCCD2 also has a limit, I believe. Just give me 1 second. Let me just confirm. Okay, I'm just forgetting. ATCCD2. Whether it has a limit of 50K or not, I believe no limit. No monetary limit. Yeah, right. There is no limit here. There is no limit. There is a limit of max. There is a limit. Another limit we will study. See, if you are an employee, if you are any person, self-employed, and government employee, anyone, you wants to contribute to the National Pension Scheme, NPS. You want to contribute to the Atal Pension Yojana. You can contribute whatever amount you will contribute, that will form part of this limit. Plus, there is an additional limit they are allowing. They say, okay, additional 50K limit we are giving for the employee contribution. You can still contribute 50K more apart from this 150K limit. So this is 150K plus 50K. Now for the employer contribution, there is no limit. There is no limit. Right? Now, next thing. Under the, if for the employee contributions, for the employee contribution, there is a limit of now this scheme came in 2004. This is the chart given in the book. For the 80 CCD1, there is a limit of 10% of salary in case of an individual who is salaried, and 20% of salary who in case 20% of gross total income in case of self-employed individuals. In case of employee contribution, there is a limit of if you are salaried. Wait, there is a limit. Anil, I am coming to it. There is salaried. Any other individual? If you are not salaried, it is 10% of salary, and this is 20% of gross total income. 20% of gross total income. For the employer contribution, there is another limit that we will study. See, as far as there is no such limit of 50K, but there is another limit we have. For the employer contribution, we have a limit of, if you are following the old scheme, two things. See, in employee contribution, we haven't discussed old or new because only 80cc D2 is allowed in the new scheme. Others are in the old scheme only. You bifurcate here in two. If you are in the old scheme or you are in the new scheme. If you are in the old scheme, then again, two arrows we need to make. If you are central government employee, if you are government employee, central or state government, if you are government employee, if you are CG oblique SG employee, then it is 14% of salary. If you are others, for others in the old scheme, there is a limit of 10% of salary. Same here, new scheme, the limit for both is 14%. The limit for both is 14%. Please note it down. We will do questions, Anil. Wait for it. Have you noted down? Write a note. Only 80 CCD2 is allowed in new scheme. Only 80 CCD2 is allowed in new scheme. Let's do a question first, then we will come to the text. Come down. Come to this page, page number 6.29. Illustration number 5. Illustration number 5. The basic salary of Mr. A is 1 lakh per month. He is entitled to dearness allowance, which is 40% of basic. How much is the dearness allowance? 40,000 per month. 40,000 per month is the dearness allowance. 50% of DA forms part of retirement pay. Both Mr. A and his employer A contribute 15% of salary to the pension scheme in 80 CCD2. Can you see? Employee contribution, employer contribution, they've given both. Both are 15%. Explain the treatment in case he has exercised option of shifting out of the default tax regime. And what if he is in the default tax regime? Illustration number 5, a good question. What if he is in the old regime? How much is his salary? How much is his salary? Salary is 1 lakh per month. So total salary is 12 lakhs. How much is his DA? DA is 40,000 per month. 40,000 into 12. That is 4 lakh 80,000. That is 4 lakh 80,000. Now, how much they are contributing? 15% of the basic salary. Employee contribution is 15% of the basic salary. Now I'm writing whatever is given in the question first. And same is the employer contribution. Employer contribution is again 1 lakh 80,000. 15% of the basic salary. Clear? Now let's compute. Now how do you define the salary here? Now what I said, for the employee contribution, he's a salaried person. The limit is 10% of salary. The limit is 10% of salary. So you calculate 10% of salary. For this, we will calculate salary. The same salary we will calculate. Basic salary, how much? This plus how much DA forms part of retirement? 50%. 50% forms part of retirement. So we will take only 50% here. How much? 2 lakh 40,000. Total is coming 14 lakh 40,000. Total is coming 14 lakh 40,000. Now you take 10% of salary now. 10% of salary. This will come 1 lakh 44,000. 1 lakh 44,000. Now tell me, how much is your employee contribution? Sorry, just one correction here. This limit was for 80 CCD1. This was for 80 CCD1. Please correct it. Just add one line here. I forgot to write here. This is for 80 CCD1, 80 CCD. This is 80 CCD2. Okay. Now, how much will be allowed in 80 CCD1? Maximum allowed in 80 CCD1 is 1 lakh 44,000. Right. Now, how much he has contributed? How much employee has contributed? He has contributed 1 lakh 80,000. How much is the excess? This excess is 36K. Can you allow it in 80 CCD2? There is ACCD1B. There is a maximum limit of 150K. So you can allow it in 80 CCD1B. There is no such limit of remuneration there. 80 CCD1B directly allows you maximum 50K. So maximum is 36K here. It is allowed here. So final answer will be 80 CCD1. How much will be allowed? 1 lakh 44,000. 80 CCD1B, how much will be allowed? 36,000. So total allowed will be 1 lakh 80,000. Total deduction allowed will be 1 lakh 80,000. Is everyone with me till here? Is everyone with me till here? Do you want to advise me something here? First of all, is everyone clear till here? Is everyone clear till here? Right? Now with this, the limits are also clear. With this, the employee contribution 80 CCD1 limit is also clear. We apply it on salary and 50% forming part of DA and all. Next. Next is, do you think something here? Let's suppose, I'm just assume. Yes, Vishaka is correct. Use limit of ATCCD 1B first. Assume you have also paid tuition fee 50,000. Assume you have also paid, you want to maximize the deductions? Assume you have also paid tuition fee of 50,000. Now this limit is combined. ATC plus CCC plus CCD1 limit is combined 1,50,000, right? And ATCCD1B has a limit of 1 lakh. 1B has a limit of 50,000. Won't you like to adjust this 50 first? You will like to adjust this 50K first here, and then you will use the balance from here, because still you will have 20,000 scope to utilize this tuition fee, right? Because this limit is combined. Are you getting me? So you would like to use the limit of ACCCD 1B first. So better to use limit of ATCCD 1B first, right? So this should be the better answer. This is better. Now this is the answer for the employee contribution. For the employer contribution, how much is allowed? See here, are you following the old scheme? You are not a central government employee. I think you are not a central government employee here, right? Yes. Nothing even. 10% of salary. 10% of salary was allowed. Again, 10% of salary will come 1,44,000. The maximum allowed is 1,44,000. Maximum allowed is 1,44,000. Even though the employer contribution is maximum allowed will be 1,44,000 deduction. Even though contribution is 1,80,000. In the new scheme, they said also answer in the new scheme. If you will follow the new scheme, will there be any employee contribution deduction? No. ATCCD 1B is not allowed. ATCCD 1 and 1B is not allowed. Only the employer contribution will be allowed. What will be the limit? Employer contribution is allowed 14%. Now they will be allowed 14% of it. They will allow 14% of 14,40,000. This is coming 2 lakh 1. 14% is coming 2,01,600. Now what is my contribution? Contribution is 1,80,000. So my entire contribution will be allowed. So the maximum allowed is 1,80,000 under ATCCD 1, ATCCD 2. Is that clear? I hope with this question all the limits are clear. This is a good question. Let's go to the book now. ATCCD. Pension scheme of central government. They can contribute the 10%. I will not read line by line, okay? They can contribute 10% of salary every month. It is also applicable to the individuals, any other employer other than central government as well, and self-employed individuals as well. ATCCD is a pension scheme notified. Even the Atal Pension Yojana is notified here. ATCCD 1 is for the amount deposited by an employee, 10% of salary. In case of self-employed individual, it is restricted to 20% of gross total income. Deduction under ATCCD 1 will be available only if you opt for old regime. This was ATCCD 1 chart, 10% and 20%. 80CCD 1B says there is an additional deduction. There is no condition of 10% of salary or something. Additional deduction up to $50,000. Whether or not any deduction is allowed under section 80CCD 1. Next, 80CCD 1B is also available only when you opt out of shifting out of the default tax regime. It means when you follow the old regime. This everything I have written here in very clear terms. Okay, let me write here. This is in old regime. This is again in old regime. This is old as well as new. Old oblique new. Both allowed. Where deduction under section 80CCD1 is subject to overall limit of 1,50,000 under 80CCE, 80C plus CCC plus CCD1 put together. And there is an additional deduction under 80CCD1B, 50,000. 80CCD2 is for employer contribution. The entire employer contribution would be included in the salary, restricted to, in case of central government employee, 14%, other employees 10% in old scheme and 14% in the new scheme. See here, a way to remember it. For the employer contribution, central government is always 14%, new scheme also, for others also 14%. They wanted to promote the new scheme. That's why they haven't increased the limit of the old scheme. Earlier it was used to be 10%. But they have increased the limit of old scheme, new scheme, but they want to promote the new scheme. They have kept it as it is. Old scheme they have kept 10% only. Deduction under 80CCD2. The limit of 1,50,000 does not apply to the employer contribution because it doesn't come in 80CCE. No deduction will be allowed under 80C in respect of amount paid or deposited by the SSC for which deduction has already been claimed in 80CCD1. You cannot claim the double deductions, right? Next, deduction for contribution made to NPS Vatsalya scheme. Now you can make contribution. NPS Vatsalya scheme is a NPS scheme designed for minor Indian citizen up to the age of 18 years. Their guardian can contribute on behalf of them, right? And then once they attain the age of my major 18 years, then it will be shifted to an NPS tier 1 account. Now, deduction under section 80CCD1B is allowed for any amount paid and deposited in minor under pension scheme. However, the aggregate under 80CCD1B is cannot exceed 50,000. You can contribute for the minor below the age of 18. When the minor will attain the age of major 18 years, then it will be transferred to NPS tier 1 account. It is treated as contribution in 80CCD1B. The entire limit is $50,000, 50,000 INR. Deemed income. They say if you will withdraw any money, from the minor or in the minor's pension account or accretions to such account shall be taxed in the year such amounts are received at closure of the account. Whenever you close the account or you opt out of the scheme or you receive any pension, then that money will be taxable. But if money is received by the nominee on the death, then it is not income. It is further provided that the amount received by a person being a parent or guardian or nominee of minor shall not be deemed to be the income of the person if such received by the closure of pension scheme due to death of minor. Because of death of minor, if you are receiving any income, if you are receiving any money, then that is non-taxable. The assessee shall be deemed not to have paid any amount on the previous year if the used is for purchasing an annuity plan in the same previous year. If whatever money you have received, you have closed, let's suppose you have closed the minor's account, whatever money you have received, you deposit in the another annuity plan, then it's fine, it will not be taxable. Next, there are 3 points we need to discuss. These 3 points says, this point says, exemption on payment from NPS trust to an assessee on closure of the account on opting out of the pension scheme. If you are opting out of the pension scheme and you are getting a lump sum amount, if you are closing the account, and you are getting a lump sum, right? You are getting a lump sum. Then if you are closing the NPS account, you are getting the lump sum withdrawal, then 60% will be non-taxable. 60% will be 60% is exempt, 60% will be exempt, and 40% will be taxable. Clear? Everyone, are you with me? Are you with me till here? Next, if you are making the partial withdrawal, then if you are making the partial withdrawal, not the full withdrawal, then 25% will be exempt and 75% will be taxable. 25% will be exempt and 75% will be taxable. Exemption on payment from NPS. If you withdraw any money from the minor account, from the partial withdrawal, again, if you withdraw any money from the being the parent or guardian of minor on partial withdrawal, again, 25% is exempt and 75% is taxable. And 75% is taxable. Is that clear? These are very simple lines. You can read it. Okay. Because if I will read every single line, then probably will not be able to cover it up. Whichever are very important things, I'm reading line by line, right? But very simple things, if they are there, I'm just explaining it. Okay. Everyone, are you with me till here? Can I move ahead? Just read it once. If you still face any query, I'm there. You can ask me in the next session. Limit on deductions under section 80C, 80CCC, 80CCD1. This we have already discussed, 150K limit. These limits we have already discussed. And here also to clarify, 80CCD1 and 2, salary includes dearness allowance if the terms of employment so provide, but excludes all other allowances and perquisites. Illustrations number 5 we have already done. Illustration number 6 is your homework. You need to do it yourself. Very simple example it is. Whichever is relevant, I'll surely discuss. This is your homework. 80CCH. 80CCH. This is a very simple provision. (80CCH). Deduction in respect of contribution to Agnipath scheme. The government launched Agniveer scheme, right? Everyone knows it. For the army personnels, the government launched a scheme, Agnipath scheme. Now it is for the enrollment of the youth in the Indian Army. In 2022, they launched this scheme. They've created a fund, Agniveer Corpus Fund. They've created a fund, Agniveer Corpus Fund means a fund in consolidated contributions of all the Agniveers, and matching contributions of central government along with interest on both of these are held. Employee also contribute here. Who is the employer? Central government is the employer. Employer also contribute in this. Employee also contribute, employer also contribute. Now, there are again two sections, ATCCH1 and ATCCH2. ATCCH1, ATCCH2. It is the employee contribution. It is the employer contribution. It is allowed under old regime, same as ATCCD. It is allowed in old as well as new regime, both allowed. Both in both it is allowed. That's it. See here, features of Agnipath scheme. Each Agniveer is contributing 30% of its customized Agniveer package to the individual's Agniveer corpus fund. Further, the government is also contributing the matching amount to the Agniveer corpus fund. The government will also pay to the subscriber interest as approved from time to time on the contribution standing in his account. Deduction. ATCCH provides deduction in respect of contribution made in Agniveer corpus fund by the individual enrolled in the Agnipath scheme and central government. ATCCH1 provides a deduction for the amount paid or deposited by the assessee being an individual enrolled in Agnipath scheme, subscribing to Agniveer Corpus Fund on or after 1st November 2022 in his account in Agniveer Corpus Fund. ATCCH is allowed only if you follow the shifting out of the default tax regime, only if you follow the old regime. ATCCH2, it is for the employer contribution. Contribution made by the central government. Central government is the employer, is allowed as a deduction, right? The entire central government contribution to Agniveer would be included in the salary. First, all this contribution is included in the. Now, I think you have already discussed. If any employer contribution is there to the pension fund, first you include it in the salary, then deduction is allowed, right? First you include it in the salary, then deduction is allowed. Are you with me on this point? If employer is contributing to pension, that is also included in the salary, then deduction is allowed. Then if to the Agniveer Corpus Fund also central government is contributing, that is included in the salary first, then deduction is allowed. The entire central government contribution to the Agniveer Corpus Fund is included in the salary of the assessee. However, deduction under section 80CCH2 would be available for the same, and it is irrespective of the regime. And whenever you will withdraw money from the Agniveer Fund, Agniveer Corpus Fund, it is exempt. Whenever you will withdraw money, it is exempt. Clear? We will cover one more section today, 80D. Again, we will make some notes on the Excel, then the book will be very, very easy. See, make a habit of writing. Don't just study, right? If you write, the things get registered in your mind. ATD. Good. Those who are noting with me, it is good. Deduction in respect of medical insurance premium. Medical insurance premium. See, in ATC, we covered self, spouse, and children's. I have to cover one more person in the family. Which one would you like to cover? I have to cover one more person in the family. Which one would you like to cover the first? Parents. That is a good choice. Right? ATC was for these three and parents. Now tell me, in ATC, child was dependent or independent? In ATC, both were covered. Right? Both were covered. See here. I'd asked you, I'd in fact noted down here, dependent or independent, both. Here, only dependent child will be covered. Here, because the examiner can trick you with this. Here, only dependent child is covered. Only dependent child is covered. Rest everything is same. Parents is added. Only dependent child is there. And the parents are added. Parents are added here. Okay. Next. See, Anil, I can assure you that within these three classes, you should be able to remember the section numbers. These section numbers are important. You will be able to remember. In one or the other way, I'll try to revise it simultaneously. Okay. Now, if an individual is taking the insurance policy, medical insurance policy for the self, for the spouse, for the children, self, spouse, or children, or the parents, dependent children or the parents, then whatever premium they pay, whatever insurance policy premium, medical insurance premium, medical deduction is allowed for medical insurance premium paid for any of the above, whether you paid for yourself, for your spouse, for dependent children, for your parents, then deduction is allowed for medical insurance premium. Again, this deduction is in the old scheme or new scheme or both? This deduction is in the old scheme, new scheme, or both? Everyone. This deduction is in the old scheme, new scheme, or both? It is in the old scheme because I've already told there are only three deductions in the new scheme. ATCCD2 we have discussed. ATCCD CCH2 Agniveer employer contribution we have discussed. There is only one more, ATJJAA, that we will discuss. Rest everything is in the old scheme only. It is in old scheme only. Right? Now, there are limits. See here, parents can be dependent or independent. Both are covered. Parents can be dependent or independent. Parents can be dependent, oblique independent. Now, the limit is, there are two types of limit. If you paid for self, for spouse, or for dependent children, then there is a limit of 25K or 50K. If you paid for parents, whether they are dependent or independent, there is limit of 25K or 50K. If you are a member of HUF, you take for any member of family, there is limit of 25K or 50K. What does it say? See, if you are a member of HUF, HUF can take for any member of family. Self, you can take for your parents, for yourself, your dependent children. If you take the insurance policy for yourself, for your children, or your spouse, the maximum allowed is 25,000 for the premium. The maximum deduction allowed is 25,000. If anyone is senior, normally you yourself or spouse will not be any senior. If anyone is senior citizen, then 50K limit. Normally there is a limit of 25K. If anyone is a senior citizen, then there is a limit of 50K. Same here. Normally in case of parents, the 50K limit is there because parents are normally senior when you take it for your parents, right? Same here. Now, another thing, you can pay for these three things. There is another thing called preventive health checkup. What is preventive health checkup? You go for preventive health checkup, right? Nowadays, annual checkup, 6 monthly checkup, you do it, right? You go to the doctor and say, okay, for a regular checkup. That is called preventive health checkup. For preventive health checkup, whatever expense you incur in respect of payment for preventive health checkup, deduction of 5,000 is allowed. But this 5K is included in limit of 25K or 50K. This is not additional 5K. This is included. This is included. Next, you can pay premium of Mediclaim policy. You can pay for preventive health checkup. You can pay for expenses for medical treatment. Premium for Mediclaim policy, it should be other than cash. It should be paid other than cash. Preventive health checkup you can pay in cash. Expenses for medical treatment you need to pay other than cash. It is per annual limit. Now, what are expenses for medical treatment? See, normally when you cross the age of 60, insurance companies stops giving you the policy. Insurance companies stops giving you the policy. In case of senior citizen, if unable to get health insurance policy, then can claim actual medical expenses as deduction. Then can claim actual medical expenses as deduction. But the maximum limit will remain the limit of how much limit, 25K or 50K? If it is a senior citizen, how much will apply? Limit of 25K or 50K? 50K. Right? Another thing. If you have paid premium for multiple years in lump sum, you will take pro rata deduction. You will take pro rata deduction. Have you noted down? Can I move? Okay, 80D. Applicable in only in case of old scheme. 2 minutes. Quickly. Anchal, pro rata, you should understand. If I paid for 5 years, let's suppose I paid premium of 2 lakhs for 5 years. How much deduction I will get? I will get this year 2 lakh divided by 5. I will get for pro rata this year 5 years 40,000. Clear, Sushmita? Amar, quickly. Yeah, 2 lakh in total for 5 years. That's what I'm saying. Okay. In case of an individual, deduction in respect of insurance premium paid for family, a deduction to the extent of 25,000 for the premium paid for the insurance of self, spouse, or dependent children, any contribution made to central government health service scheme, any other health scheme, if you have made any premium policy payment, CGHS scheme, if you have made, right, any scheme you have made contribution, the deduction is 25,000. For parents also 25,000 is allowed. Now 20,000, 5,000 becomes 50,000 if it is 60 years or more. For the preventive health checkup, I will not read by line and by line. For preventive health checkup, there's a deduction of 5,000, but that 5,000 is included in the overall limit of 25 and 50K. Mode of payment, you can pay by any mode other than cash, right? Including cash, sorry, any mode including cash for the preventive health checkup, and for others, any mode other than cash. Only the preventive health checkup amount you can pay in cash, otherwise not cash, not allowed. Deduction for medical expenditure incurred on senior citizens. Deduction for medical expenditure incurred for senior citizens. If it is as a measure towards senior citizens, a person age of 60 years or more resident in India who are unable to get health insurance can get a deduction up to 50,000 for the actual expenditure, right? Next, deduction under section 80D is allowable in respect of premium paid to ensure the health of member of family, or maximum deduction allowable is 25,000 or 50,000. For the HF, you see any member of family. Further, if the amount paid on account of medical expenditure of any member of family who is resident senior citizen would be subject to maximum 50K, same provisions repeated. Other conditions. The other conditions to be fulfilled, such premium should be paid by any other mode other than cash in the previous year out of his income chargeable to tax. Further, the medical insurance should be in accordance with General Insurance Corporation of India or any other insurer approved by the IRDA, Insurance Regulatory Development Authority. They have given you a table here, good table. 25,000, 50,000 for self, 25 and 50 for parents. 5K allowed for the preventive health checkup. Actual expenditure, senior citizens not able to take the insurance, 50,000. Come to this point number 4, 80D4A. Appropriate fraction of lump sum premium allowable as deduction. In case of Mediclaim, premium is paid in lump sum for more than 1 year. If you're paying the premium for more than 1 year, an individual has to effect or keep in force an insurance on his health or health of spouse, dependent children, or parents, or to HUF, then the deduction allowable under this section, each of the relevant previous year, would be equal to the appropriate fraction of such lump sum payment. 1 divided by total number of relevant previous year. Let's do this example. This example is good. In fact, let's do these two illustration number 7 and 8 are good. Let's do these two. These will be Illustration number 7. Mr. A, aged 40 years, paid medical insurance premium of 20,000. Okay, we can do it here directly. He has paid a medical insurance premium of 20,000 to ensure the health of his and his spouse. He also paid medical premium of 47,000 to ensure the health of his father. For father, they have paid 47,000. See, deduction is allowed for self as well as parents. Separate limits are there. Right? Got it? There are separate limits for the self and spouse and children. All three combined in one bracket, then another bracket for the parents. Father is not dependent. Will it make any difference? Father is not dependent. Will it make any difference? The parents can be dependent or independent, both are allowed. He contributed 3,600 to the CGHS scheme and he contributed 3K in cash. 3,600 to the CGHS scheme and 3K in the preventive health checkup. He incurred 3K in cash on the preventive health checkup of himself and 4K for the father. 4K is also incurred for the father. 4K is also incurred for the preventive health checkup for father. In cash, it is fine. Up to 5K it is allowed. Right? Compute the deduction. See here. For yourself, you have spent 20 plus 3,600 plus 3,000, 26,600. Now you are not senior citizen. You are 40 years old. You are not senior citizen. Maximum allowed is 25K. Maximum allowed is 25K. We will allow 20 here, 3,600 here, 1,400 here, 25K is allowed. Now for the parents who is 63 years old, senior citizen, 47 plus 4, maximum preventive is 5K. So it is 47 is allowed here, 3 is allowed here. Maximum 50 is allowed here. So 25 plus 50, 75,000 is allowed as deduction. 75,000 is allowed as deduction. I hope it is clear. I hope it's clear, everyone. Illustration number 8. I think this is very simple. You can do it yourself. Or maybe let me do it. Here they say Mr. Y, aged 40 years, paid medical insurance premium of 22K to ensure the health of his and his spouse and dependent children. He also paid medical insurance of his mother, 67 years old, 33,000. He has paid 33,000 for the mother. Plus, he incurred medical expenditure for his father who is not covered in the medical claim policy. He has incurred 20K for the father who is not covered in the policy. Right? His father is also not dependent on him. He contributed 6K to the CGHS scheme. He has contributed 6K to the CGHS scheme. Compute the allowable deduction. For he himself and his dependent children, 25K is allowed. 22 plus 6, 28. Maximum 25 is allowed because he is not senior. For the parents, mother is 33K allowed, father 20K allowed, but the total cannot exceed 50K. So 50K is allowed. 25 plus 50, 75K is allowed. 75K is allowed. Is it clear, everyone? Are we on the same page? I hope you have understood whatever we discussed today. Have you understood? Are you enjoying the sessions? I hope you are enjoying, you should be enjoying the sessions, right? Let's do one thing. I'm uploading a file quickly. Anyone can confirm me if you are able to see the file. Okay. I'm uploading the file. Give me 1 minute. Just confirm me right away if you are able to see the file. I'm uploading this chapter also I will upload. Okay. Whichever I have edited here, this also I will upload. Is there any need? Should I upload these chapters or not? I think I should. Our first session clubbing was on 25th of July. 25th of June. Sorry. I have uploaded the chapter number 4 clubbing file. Can you please see it? Not the Excel file, but this PDF of the chapter where I edited it. Can you see it quickly? Can you please confirm? Can anyone confirm me? To me, it is showing as uploaded. Vishaka, you can see it? Okay, fair enough. The same way I will upload the other files as well. Okay. So I will make these these Excel files I will make as PDF and then upload it. Okay, so that you will be able to access the notes. Earlier Excel upload option was there. Now some issue is there in the portal. Okay, no problem. If you have any queries, you can ask. Anyone any queries? Okay. Next session is on. Our next session is on Tuesday. It's at 7 a.m. By the way, all of you are appearing for the exams in September, is it? All of you are appearing for the exams in September, is it? Then January, until January, Jan 27, okay. Prepare a strategy for your exams. Always prepare your plans on paper. Don't keep it in your mind, okay? Always prepare your plans on paper. CA curriculum is just somewhat lengthy, but it's not difficult. If you can cover up the lengthy portion, you can easily crack it. There is nothing difficult. Okay, final call if you have any queries. I'm waiting for last 1 minute. Anchal, I couldn't get you. If you are writing notes, how should we write? Anchal, I doubt if you will prepare the notes. It is difficult to prepare the notes, right? Because see, revision summaries are already given. See, Anjal, I'll give you one suggestion. You are asking to prepare notes for all the subjects. See, the time is not so much that you can prepare the notes. You can write the notes by your hand for all the subjects. You can get pre-printed summaries on all the subjects. ICAI has given you, the BOS has given you the pre-printed summaries. You can refer those summaries. Let's suppose if you feel like you need some additional point in the summary, add then and there in the book. Add then and there in the book. And always make use of highlighters. On the last day of the exam, you cannot read each and everything. You cannot read each and everything. You cannot read each and every example. What I used to do, I used to keep two highlighters. Even today, these two highlighters are there in my office table. I used to use green highlighter because I teach. Whenever I also teach, I also highlight the things, right? Because for teaching also, I also need to study, right? So, in fact, not only I teach other things as well. So, I also need to study, right? So even whenever it is a client report as well, we keep highlighters. So I used to highlight the important things with the yellow one, but there are some things which are troubling me every time, very, very important things, which I used to highlight with the green color, because on the yellow, the green is easily visible and both the colors are visible. They do not overshadow your numbers, right? Whatever is written in the book. So I used to highlight the highlighters a lot. And on the last day of the exam, I just read the highlighted portions. I just read the highlighted portion and focus more on the green highlighted ones. And even in your first revision, when you do your first revision, you can study all the things, but in your second revision, you cannot study all the things. You highlight the questions which you need to do. You cannot do everything every time. Please do analysis, and that you can only do yourself. Instead of preparing the notes, revise the things. That will be better. And Anchal, in the summaries, wherever you feel like, you can just add on. You can just add on then and there, right? Even while teaching you, I have prepared some notes. I have added some of the examples which I want to give you additionally here in these note sets only, right? You can easily do it. If you have done the entire curriculum, you can easily crack the exams. You can easily get ranks. I secured in intermediate, I secured All India rank 50. In finals, I secured All India rank 33. Okay. Okay, then. Thank you very much, everyone. We'll meet you on Tuesday. Please do revise. Do revise. And do practice the questions. Test your knowledge questions. Do practice for clubbing of income and set off. Okay. Okay. Thank you very much, everyone. We'll meet you on Tuesday. Thank you. Team, we can close the session. Thank you.
Okay, sir. Thank you, sir.